Now let's do our call of the day, and it is a bullish one on Starbucks. That comes over at Opco. They call it an actionable buy idea right now. We like actionable ideas on this program. Price target goes to 101 from 85. An attractive entry point and opportunity. They say, Jim, you own Starbucks. You know, we just talked about Starbucks last week, how I think there was an upgrade, and it was a firm that was using sort of its own modeling and its own numbers because you weren't really getting any information out of Kevin Johnson, the CEO of Starbucks. China remains a significant issue for Starbucks. So what about this call now? Is it an actionable buy idea, as Opco says?
I do think it is, because I see an asymmetric risk-return spectrum here. Let's just say, I mean, first off, China international is about 23% of business, and I think that's actually more of an opportunity than a risk. China's economy clearly has been reopening, and they're doing really quite well. So I think that's an opportunity more than a risk. I think what the question is what goes on here in the U.S. And, you know, Starbucks now trades at 30 times next year's earnings. That's very reasonable in this current interest rate environment. But more to the point, that's an earnings stream that is not reflecting a fully reopened economy. So imagine when the U.S. economy is fully reopened, whether it's next year or the year thereafter, I just see there's more room to grow into the share price of that target of 101 as the economy continues to reopen. And the multiple as it stands right now makes me comfortable that the downside is limited. So it's that asymmetric risk return that really leaves me comfortable. One last thing, and then I'll stop. You know, they have about $4 billion of cash on the balance sheet right now. That's from the Nestle deal they did about 18 months ago. And that's cash that can either be used to make some interesting acquisitions or to return capital to shareholders. And I don't think that's priced in either.
Well, look, the stock's moving up as we speak. It's at 88 and 33 cents. You say you need an all clear on the second wave for it to go above 90. I mean, apparently not. The stock's pushing on 90 right now.
Well, I'm talking about the 101 target, but I think it'll get there, Scott. I mean, I think this, let me rephrase this. I think this is a stock that at its current price is still reflecting much more pandemic impact than is likely to be the case over the next 12 months. That's why I see the asymmetric return being to the upside, not to the downside. I see downside protection at this level.
Okay. I'm looking at some information that I see. You're mentioning like hotspots and what we need about the virus. Some more developing information about the New York City school system, which I'm trying to get some more information on as well. So I'll keep my eye on that. Jim, let me stay back with you while I try and do that. Roku's price target gets raised to 227 from 190 at Bank of America. 10 reasons to stay long, they say. So we've talked about this stock on so many occasions with you, but what do you make of this call? To 270 from 190.
I think, look, yeah, I mean, that would be basically the same sort of return that it's had over the last month. We know that this stock tends to move in very, very large cycles, both to the downside and the upside. But right now it's in an upswing. So that roughly 12% return, I think you could very easily see that before the year end. I don't think this is a stock that trades much on valuation, but if I were to do that, I would say, look, it's 11 times next year's sales, which is right in the range of 10 to 15 that it's been in for most of the last 3 years. So I could easily see another turn being added to that, which would bring it to the target. Bottom line, Scott, and you know this, it's a trading vehicle for me. I think it will get there, but if this thing turns down before it reaches, I'm not going to hang on for that price target. I'll get out when it starts turning down.